So, how to invest your money for retirement. Now in this video, we're going to talk a little bit more about why we use stocks versus other things. Why most people use stocks in their 401k, 403b, and IRAs, and in any kind of saving for a future event, right? Investing. And how you can find kind of a good allocation or portfolio for you based on a few things. So if you're watching from the previous video on how to invest your retirement, this video is going to kind of continue on those 4 basic steps, which is your time horizon, how much time you have before you need that investment to be realized, when you can take it out. Number 2, your risk tolerance. How much of a roller coaster ride can you ride? Number 3, what your risk aptitude is and how much overall risk you can take based on your entire financial picture. And number 4, how much you actually need for retirement. So let's start. Why stocks? So in the history, again, past performance does not indicate future performance. Okay, first, again, back to why stocks. So stocks have typically outperformed inflation, and inflation is the number one cause of the decay of our money. Inflation, if you you watch the news over the past couple months, inflation in the US has topped off at 7%, which basically means what cost $1 last year now costs $1.07. So if you had $1 sitting in the bank, it's no longer enough to buy whatever it was last year in 2022. So stocks will keep us ahead of that. But because stocks are risky, we actually have to deal with volatility, and that's the risk tolerance portion. So if the goal is just to beat inflation, then why not just use an savings bond? You can see here, they pay what inflation pays. Unfortunately though, that's not going to be enough, because when inflation is 0 or lower, things still tend to get more expensive. And also our money doesn't go anywhere, doesn't grow anywhere, it's not meant to grow anywhere in this inflationary type hedge. So we have to figure out how to also make our money work for you. I think maybe many of you have heard of that, where your investments kind of go to work for you. It's like our money goes and talks to other money, and they somehow get more money to work for money, and then we end up having with, like, instead of $3, we have $4, right? That's the whole idea of investing. So it's not just about beating inflation, although beating inflation is a very good reason, but it's not the main reason. The main reason is we want our investments to grow. So inflation, secondary. The main reason, should go number 1, is that we need our money to grow, we need our investments to come to fruition, and we need to get a larger amount of money than the original investment we put in. And stocks have been historically good at that. What investments should you be looking at? Now, if your time horizon is more than 10 years or a lot more than 10 years, the broad suggestion, as most people say, would be to just invest in some index funds. There's the S&P 500, Nasdaq for tech, Dow Jones is the Dow Industrial, the 30 top blue chip stocks, IWM or the Russell is 2,000 small companies. That's a pretty generalized approach to investing in US equities. Now you could go the exotic, go to emerging markets, international, things of that nature. But you don't really have to. Most people say if you just put your money in the S&P 500, like Warren Buffett says, that's probably going to be a good enough return for you. Now, I'm not saying that's an investment strategy, but the S&P does have an investment strategy. And let's go through each one of those investment strategies of the 4 major indices that we have in the US, so you can kind of decide which one might be the best for you. So let's get into the fun investment part. And the 4 most common indices that we have in the US are, number 1, the Dow Jones Industrial Average. Number 2, the S&P 500. Number 3, the Nasdaq 100 Composite Index. And lastly, the small caps of the Russell 2000. So what are in these indices and how are they calculated? Well, first, the big one of them all, the Dow Jones Industrial Average. The Dow Jones Industrial Average has 30 of the largest US blue chip companies, and the price of the Dow Jones Industrial Average is a price average of all those 30 companies. So because there's 30 companies in it, it's all those companies' prices added together, then divided by 30. So it's very simple. Now the Dow Jones Industrial Average does have large companies like Boeing, like Disney. You can see a list here for all the large components of the index. And one of the most common ways to trade the Dow Jones is by trading the ETF, DIA, also known as diamonds because DIA for diamonds, right? Dow Jones Industrial Average. And other ways you can trade the Dow is listed down below. But the most common one with the most liquidity is the DIA. Next, we have the S&P 500. Now, the S&P 500 is a market cap weighted. So if the company is larger, they will occupy or take up a much larger portion of the S&P 500. As you can see down below, this is the weightings or the current weightings of the S&P 500 with the companies in it. Lots of names you know, obviously, because these are 500 of the biggest companies in the US. And the S&P 500 has separate methodologies to keep the companies in the S&P. Currently, I believe they have 502, but that kind of changes anywhere between 498 to about 505, depending on which of these companies meet or exceed the qualifications to get them into the index. Again, the S&P 500 is said to be a measure of how the economy is doing as far as the US. Can't always be right. Obviously, during COVID, we kind of saw that happen when liquidity or the influx of new money that the Fed was printing helped get the S&P 500 to all-time highs all the time throughout the whole of 2021. We'll see what happens in 2022, but that's the S&P 500. Now, ways to trade the S&P 500 is most commonly SPY. That's the one that I use. That's the one with the most liquidity as far as having options and having the ETF to trade. Vanguard also has, I believe it's VOO, and there's also some more you can look at if you want to buy or look at other ETFs that mirror the S&P 500. Next, we have the Nasdaq 100. And Nasdaq 100, in case you didn't know, is a tech-heavy indice. And tech-heavy is primarily what I think of it when I think of the Nasdaq. I think tech is up if the Nasdaq is up, and tech is down if the Nasdaq is down. But as you can see here, they also have other things like telecommunications and healthcare. So it's not just technology companies as you know it, but as you can see here, here's all the components of the Nasdaq. Now the Nasdaq, unlike the first two, which is just large companies, irregardless or irrespective of their industry, this one has a little bit more bias. So it's going to be more volatile because it is a smaller subsector, smaller cut of the overall US economy. The most common way to trade the Nasdaq is by trading QQQ, and that is the most liquid ETF that tracks the Nasdaq 100. And of course, you can get that primarily anywhere that you have a brokerage out. And lastly, we have the Russell 2000. Now, the Russell 2000 keeps track of 2,000 of the small companies. Now, unfortunately or fortunately, these companies are very volatile, and this index has the most risk, but also the most reward, because some of these companies could be expanding or opening up new markets that were undiscovered. Here's a list of their major components. A lot of, again, probably familiar names, just not as large as those we find in the Nasdaq, S&P 500, or the Dow Jones Industrial Average. Now, what could you do? Well, depending on your investment thesis, and this is kind of where I'm going to, I guess, stream out into kind of what do you think? So if you could leave in the comments down below, if you're finding this video valuable, please hit the like button. But if you really want to have a tech-heavy investment portfolio, hey, hit the Nasdaq up. Maybe weight it 60%. If you don't know, well, maybe buy 25% of each. Or you could buy what's called the Vanguard Total Market Index and just buy everything. And that's another way to go if you can't make a decision, but you think the US economy is going to do well. Or if you think the entire stock market is going to do well, Vanguard has a total stock market index one as well, which is everything and everything, I believe, for your investment. So you can just kind of set it, forget it, keep buying every time you do a paycheck deduction. If it's a 401k or 403b, or if an IRA that you set, a couple $100 a month to put into an IRA, which is what I do, so that I'm not really thinking about it, investing in, just broad-based indices for my retirement. And I know a lot of you probably wanted more direct guidance, but I'm just going to say, that's kind of how the best way to invest is. It's putting it into a strategy. Now, these strategies base their outlook on the U.S. economy. So if your outlook on the U.S. economy is terrible for forever, then maybe you have to look elsewhere. But for most people, you know, their outlook on the US economy is positive. That's why we still live here. That's why we still work here. And we kind of, or at least we think it's better than other countries. So that's where my investment thesis is, at least for this video. And that's why we're going over the 4 major indices and how you can invest in them. If you have any questions as far as, you know, how much to invest or like what the right amount you need to invest in, you can check out my videos down below on how much you need per year. I will warn you, it is quite shocking. I'm not even there where they say you should be, so don't feel bad. It's one of those videos where I think it's more like a kick in the back or kick in the butt to kind of just get you started. But there's that video. And also, right now Webull is giving you a free 2 stocks if you sign up with my link down below. It does help me out, it helps the channel, it helps me producing this kind of content for free with no cost. And also BlockFi, if you want to look and dip into digital currencies, BlockFi is giving away up to $250 worth of Bitcoin if you use my link down below and deposit some money. So get your free Bitcoin, get your free stocks, and I'll see you in the next video.